Welcome traders to another Tickmill trading update with me, Patrick Munnelly. Want to update some of these instruments as we head into the CPI print today. 3.4% is the consensus number for core. So if that comes in line or lower than that, I think that's going to be a green light for further upside in terms of risk sentiment. And could weigh here on the dollar. We're looking on the daily time frame. The dollar is poised to test some pivotal support here into the 103 handle. We obviously have the ECB tomorrow, who are widely expected to potentially pre-announce a June rate cut. So any weakness that we see in the dollar today could see a reversal tomorrow. So I'm going to pay close attention to this 103 handle, because if we do reject that area and get a bullish reversal from there, I'm going to be looking to engage on the long side, looking for a move through our current range resistance, 104.90, 105. And that would set us up for an equality test versus the 102.30s into 106.98, just below the 107 handle there. The resistance, the double top that we saw into the back end of last year. So that's going to be a key area. If we fail the 103, we look for a move down to 102.30s. A break there would suggest that we have another high in place here, another double top to trade against. And I'd be looking for a move down to test into the value area low, just above the 100 level there. Ultimately, then whilst we hold 104.90s as a resistance, we would then have a downside equality objective to 98.20s on the downside. So some key tests coming up for the dollar index there. Moving to the equity side, we look at the SP500 using the emini futures contract. And we are in a contracting range here, triangle scenario. So I'm looking for any close through the 52.80s to set the next leg of upside. And I think we can easily test up into 53.70, 53.80. From there, we may pause as we start earnings season in earnest on Friday with banks, and then into the next couple of weeks with tech, etc. So if we can hold then any pullbacks back into this 53 handle, then we're looking for 54.20s, 54.80s on the upside, 54.60 being the monthly projected range resistance. The 54.85 will be a 5 equals 1 objective versus this structure that we have in play at the moment. So whilst we hold that 51.91, we can target that 54.80 zone as a medium-term objective. In the near term, I'd be looking, like I say, close through the 52.80s to target 53.70 to 53.80 before looking for potential pullback. Wrap things up with the Nasdaq, similar type of scenario. We still have the equality objective versus the lows seen last October 22, which against that 14,135 targets 16,920s. So again, we have a contracting range here. So I'd be looking for any close through the 18,600 to engage on the long side. Again, I would anticipate some stickiness into monthly projected range resistance, 18,940s. But as pullbacks remain supported into this prior highs here at the 18,700s, then we are going to look for that extension high into the 19,600 level as the next upside objective. Now, if CPI comes in on the hot side, we could see a risk-off move today. So just going back to the E-minis here. So a hot CPI print today would be the third consecutive month, and that would be a concern to the markets. From there, I'd be looking for a move back through the 51.90s, down to test into the 51.50s, 51.40s, before we could we'd see a potential pause. But like I say, at the moment, we're poised for a print that comes in line or better than that 3.4. But if we do get a hotter print, then we can expect some risk off, and obviously that'll feed into some dollar support as well. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.